Linda Smith of Top Producer. I have with me Jerry Gulke, who's going to give us his opinions about the week just passed in the markets. Jerry?
Well, yes, we've got about 10 minutes left to go, and pretty strong day today. We started the week out pretty good. We have to try to remember that market bottoms are made on bad news. In other words, bad news price-wise, good news crop-wise. You probably have heard that people say you can't get this crop looking any better. And then, of course, as we mentioned yesterday, the USDA came out and said, yes, the crop is good, but the demand is even better. And we are using more corn as of yesterday's supply and demand than what we're going to produce. So we couldn't afford to lose anything anywhere, probably, maybe in the world or at least in North America. Estimates out of Canada are maybe 2 million acres of crop will be lost up there due to water problems. We're getting reports now out of Nebraska and Kansas where heavy rains and hail destroyed a lot of land. A lot of this causes some emotional problems with guys on the wrong side. We've had heavily short wheat people, and wheat was up 15 cents not long ago. It's up to 8 or 9 now. Corn is following through, and we'll close the week higher if we hold here, and so will wheat. I don't know about soybeans, but November soybeans, dipped down to 8.88 this week, are going to probably close above $9. It looks like, if I didn't look at the big crops coming, I would have to say you just posted the lows that we're going to see for a while, and now any kind of a bad news out of weather will look positive. I'd suggest that maybe we could see a drop in ratings, and of course on Monday, usually we see that happening this time of the year. And we'll have to watch and see what the crop looks like in Iowa, Nebraska, and Kansas for a deterioration in those states. And, of course, North Dakota is still behind in planting. So, looks good. We scaled back our hedges to 25% late last week and early this week, and we will likely get out of them completely today if we close above 369. We're at 370 and a quarter now. Meal, we covered half of that already. We'll cover the other half today, and let's see how it looks. And again, markets look the worst at the bottom and the best at the top, and all you have to do is go back in history and look at that. It's not so important how high they're going to go. There's a lot of people using targets. A couple days ago, a lot of guys on the floor of the Board of Trade wanted to sell a 10-cent rally. I thought that would be a gift, and that's exactly what they got. Now they're underwater, probably scrambling. So nothing else new fundamentally except that China may have bought a couple cargoes, more corn, just a day after they said, we're going to get a bumper crop. And so I kind of watch what they do and not what they say. So we'll see how it all ends. And it could be a flurry of buying at the end of the day. But that's a good news for farmers. And now we know we have this week's low to look at as a line in the sand, along with the crop report. And those of you that are top producer enough know that we've looked at these crop reports and saying it's not so much what they say as how we closed, and especially for the week. So now we'll look back at this and say, well, what did we hear back in the first, second week in June? And we heard that we got big crops coming, but also big demand. And that's pretty much that line in the sand that says anything below that we want to sell. And what we've done after the report was we got an opportunity to lift some hedges pretty cheaply. And, of course, the further away you get from that line in the sand, the more risk there is. You get 15 cents away, you got a 15-cent risk. 2 cents, you got a 2-cent risk. And that's what makes the difference between some hedgers that are nimble and that are flexible and say there's a place where I want to hold them and a place where I want to fold them. And we'll see how it turns out, but so far it looks pretty good. And Monday's another day. If we get a weather guys to agree that, by golly, there's a 70% chance of La Nina making it hot and dry the last half of July, first half of August, and we get a gap higher, and then Monday you get another shot at maybe lifting some hedges, knowing that you shouldn't close lower for that week. And so, and on it goes, and pretty soon we turn technicals, and then everybody, as they're like sheep, they all run off the cliff at the same time trying to get out and looking back at what we had the week before. So all in all looks pretty good. The dollar has been weaker, and all this is happening with crude oil backing off. But crude oil is still kind of in an uptrend. So we'll see how it closes, and looks pretty good, though.
Jerry, how about soybeans? Anything?
Well, we were heavily sold in soybeans, as you might recall, and we increased our sales. We'll not do anything today, but We don't have anything sold for 2011 anymore, and I think what we're finding is that beans went down to 988, and if we'll probably look at some charts this weekend again. If anybody's interested, they could go to www.gulkegroup.com, and I'll have actually send you a chart. But I looked at spring wheat, and we bought spring wheat for clients against short Chicago, and so basically nearly out of that market for 09 and 10. And what we've seen happening is the market would try to go higher, and then it couldn't fall through, and couldn't go lower, and couldn't go, drop through the sideways trading range, couldn't go any lower. We saw that in spring wheat. Now, finally, we're getting some fundamental news that tells us why we couldn't go any lower, and that has to do with the wetness in North Dakota, South Dakota, and Canada. So now you'll see the market going after some of these things. I think it probably indicates in the longer term we'll have more soybeans and maybe more canola because they couldn't get the spring wheat in. But, a rising tide raises all ships, and the fact that we're going to close above, for me, 905 is a critical area in beans. I don't want to be short above that. We'll look to see what happens on Monday, but we're only in that 25% range anyway, and sometimes you sell something just because it's feasible management-wise and hope you're wrong, and after being 125% short, I guess down to 25% is not too bad, but now we know that line on the sand is anything a weekly close below $9 again shouldn't happen, because we haven't had that in a long time. So we tested that low area, and there are buyers under $9, and I've gotten the feeling ever since our marketing forum that we had in January that the market's looking at, or in December last year, the market's looking way ahead of us. It's looking at, okay, fine, what's going on in 2009 and not 2010, but what's going to look like in 2011 when you plant the next crop with bigger and bigger demand and ever-increasing yields we better have. So I look at it and saying it's the futures market, and that's apparently what the market's looking at. It's just not, that we're looking far enough ahead that it isn't really enamored by a big crop today, at least not until we get into harvest. And for wheat to turn around and do what it's doing today, right in the front of a harvest, is pretty impressive. Not sure if it'll hold or not, but we'll see. But otherwise, beans are probably going to be the benefit of. They're going to go along for the ride, I think, and then we'll have to look at it next week.
Okay, thank you very much, Jerry. Have a great weekend.